Hey guys, welcome to another Trade Genius podcast. Bob and Phil here as usual. There's an old saying, he who panics first, panics best. We're going to tell you why that's the case here in the markets. Let's dive in.
Trade Genius.
Well, Bob, there's a term from back in the great financial crisis days, credit default swap. And lo and behold, we're starting to see those become active again.
Yeah, I mean, look, the smart money is protecting their positions because we're starting to get higher and higher default risk. We did a chart showing that I don't know if we showed that or I just sent it to you. Auto delinquencies are starting to accelerate now, especially subprime, and you're going to start seeing it across the entire credit spectrum. And so my bet is that these guys are protecting themselves. And I think they're smelling something that you and I have been talking about forever. And I think it's going to get worse. Look, there's an old adage: the smartest traders trade currency, the next smartest traders trade credit, and the dumb money trades stocks. And it doesn't mean that people are stupid. It's just those are the people that are most aware and most aggressive. And a lot of it has to do with leverage too. So I think we have a situation here, Phil, where I think these guys are not going to repeat the disaster of 2008. What they better hope and pray is that the counterparties to these insurance products have the capital to pay off the bets. And that's what blew 2008 up, because the reinsurers got blown up. So this is just the beginning. To me, this smells a lot like 2007 going into 2008, when we started getting the tremors, not yet the earthquakes. And I think this is a repeat. I mean, this is the most telegraphed market collapse that we're going to probably see in our life. Nobody should be surprised if this market's down 40 or 50% next year. Nobody should be surprised. And you have no excuse for not being positioned. Hey everybody, it's Bob with Trade Genius. Usually I do fun ads. I talk about our service, but I want to be serious with you for a second. We've been helping a lot of people trading for a long time. As you can see here, I want to let them do the talking for me for a change. But most importantly, we want to help you too. If you have not joined our service yet, come check us out, tradelikeagenius.com. Full service. We have chat room. We have the algorithms for you. We give trades out every day. We educate you. So go to tradelikeagenius.com. Check us out. What you get out of our service is much, much more than what you put into it. And we'd like to see you in the room. Thanks for listening.
Yeah, and the chart that we are bringing up today is this credit default swap. And what you guys will notice is that we're starting to see this thing grind higher and higher here. And if you were to overlay the stock market on this, it doesn't quite make a whole lot of sense, because you can see the credit defaults started climbing up in June. Well, June we already bottomed and we were starting to grind higher in the markets. Here you're starting to see them climb up again and again. We were coming up rather quickly up into the highs, the recent highs here. So you're having credit default swaps getting more active as the market's going up. So that's a big red flag, because what that tells me is that these guys that are buying credit default swaps, they're looking at things that maybe you and I and the average retail investor cannot see, and they're seeing this is basically what you would look for when you might be sniffing out systemic risk in the system. Now, like Michael Burry, he actually asked, I think it was Goldman Sachs, to create credit default swaps on the mortgage market, right? He was early to that bet for quite a bit. In fact, they thought it might blow up on him. Now, it turned out that he ended up being right, and his timing was close enough that he made out quite a bit. But he had a big drawdown on that. So it doesn't mean just because this chart is where it's at today doesn't mean that things are going to blow up tomorrow. But it does mean that we do have an issue that's brewing. I think that can manifest itself later in the year, and even possibly even the Q1 2025 before things might start blowing up. And this stuff is why they're making preparations now for that. A lot of that stuff can be a moving target, and it's really data dependent. But the point of the matter is that we should not be seeing this happen at this point in the market if everything's rosy, if the economy is healthy, and corporations and other entities are healthy. So this to me is telling us that we're on the right track. This is just a matter of how this thing's going to play out before things roll over.
Yeah, and the thing that concerns me the most is not that we're going to have a bunch of defaults. A lot of people have a lot of money, totally 100% equity in a lot of these buildings. They're not even credit issues, but what they're going to have is they're going to have income issues, because people aren't going to. Defaults go a lot of different ways. You could default on your rent payment, and they're going to find out a lot of these people are going to get gated because they can't sell the property, right? The money's already in the building, right? So you basically bought an illiquid asset. And I think we're going to see that. And I think that's a lot of risk is going to be associated with it. And a lot of rich people, that's where they have their money. And so you're going to come knocking on the door and say, hey, I want to get out of this REIT because I want to be more conservative. And they come back and say, well, hey, we can't sell the building. Or if we sell the building, you're going to take a 40% haircut on your investment. You're better off just collecting the coupon until things settle down. And that's what you're going to start seeing next. And look, we have experience with this. My mother-in-law did on a REIT. I did personally on a hard money loan, a 90-day loan that turned into a 12-year investment. So if you don't think these things can't go forever, you could be well wrong on this. So be careful.
Yeah. So let us know, guys. Do you think that there is a big default risk brewing that's going to blow up here in the coming months? Let us know your thoughts in the comments below. As always, thanks for watching. Check out our stuff over at tradegenius.co if you want to trade along with us. These markets are going to continue to be volatile into the rest of the year. We'd love to see you in the room with us. Take care, guys. Bye-bye.
Trade Genius.